This is a question from somebody which is asking, how long do we have to live in a property to avoid capital gains tax? And the scenario is they bought a property to refurbish and then sell it. They've never lived in the property and they want to know if they can avoid capital gains tax. Watch the video to find out. It's an interesting answer. This is an interesting question and one that gets asked quite a lot. And the answer is, it depends. And it depends on the quality of occupation as opposed to the length in itself. So of course, if you lived in a property for 5 years, then it's your principal private residence or your main residence. But shorter periods, it starts becoming a bit more difficult. And it depends really on whether or not you occupied the property. If you did, are all your bills there, your credit card statements there, your bank statements there? Are you going to a local church, mosque or any other faith establishment? If you have a faith, do you get involved in local community projects? Are you part of the community? Is your doctor and dentist and optician there? Those kind of things. Do your kids go to a local school if you have kids? All of those help us determine whether you were looking to stay in that property and use it as your main residence. If those things, and most of them, don't point towards you living there, then you can't claim principal private residence. So therefore, if you keep that property and you don't live in it at all, then you obviously have to pay capital gains tax. But if you live in it for a short term, if it's, let's say, 6 months, and if it's the first time, but all those things point towards there, and it was your intention to live there, but you find a better property or someone's offered you really good money, you can maybe get away with it. 6 months is time. If you've been there a year, 18 months or longer, then there's more chance. But if your bills aren't there and you're not with a local doctor, if you have children, they don't go to a local school, and if you're part of a particular faith and you don't attend the local church, temple, gurdwara, mosque or whatever, then it suggests that wasn't your main residence or your primary residence. So those are the important indicators. But in this particular question, the person saying they haven't ever lived in the property, in which case they'll be subject to income tax, because they've refurbished the property and their intention was to refurbish and sell, so they're caught by income tax and not capital gains tax if the property is only in their own name. If it's in a company, then the company will have to pay corporation tax on the profits.